Good afternoon. I'm James here, and I believe you are very busy or you're not feeling well. So hence, therefore, I shall decide to film this for you, and such that you can have some judgment. I prefer to film this and also send you the PDF of my research because just by sending the PDF, I feel that it does not convey my entire message. And I just hope that you can do me a favor and just watch this entire video because I do spend quite a bit of effort on this. Now, this video is actually specially for you only, okay? It doesn't apply to other people due to certain reasons, and I hope that you also do not share this around, alright? So let's jump in straight away. Now, first of all, I would like to set the parameters, and firstly, I understand that you are age 32, you have an income of roughly around 18,000 per month. Now, what I do is a 30% hairline cut because I assume that you are a director of company, so I will take as 15,000 as your income. Now, some of the parameters that I do not have is like your cash on hand and your CPF. Now, in future, if you are more keen on it and you would like to continue, we can actually give me this figure and then I can actually calculate what is a safety factor for you to minimize your risk, okay? Or my recommended budget for you. Okay, and looking at your 15,000 income, assuming you also do not have a car loan, your maximum loan that you can actually borrow from the bank due to TDSR is actually 1.68 million. I will never encourage my clients to go above this value because, again, why are we in property? Because we just want to leverage as much as possible from the banks to have the highest possible return of equity. Okay, so let's go on to the next slide. Now, my objective for both of us is very simple. You like to invest in one property and you like to exit out in 5 to 7 years time. Of course, you like to have your maximum return of equity and possible that this place, the tenancy is very good, it's easy to sell, and maybe you may want to consider moving in future. I'm not sure, but it is always good to have a backup plan. Okay, so therefore I would like to put this as a backup plan that it is flexible for own stay, upgrade, continue with a very good rental, or you may even decide to move on to a second property while holding on to this. Okay, important is that you must have a lot of flexibility. So again, my system that I shared with you the last time about my Property Plus system, let me just recap a little bit. Now, firstly, I always encourage my clients to go for developments that has more than 300 units. This is a special number. Why? Below 300 units is what we call boutique developments. Two reasons why I will reject this. Number one, boutique developments normally maintenance fee are very high. Okay, like $400, $500 per month. And secondly, with less than 300 units, the number of transaction is not there. Hence, with low transaction volume, means right we will not be able to know what is the recent pricing, and it is very hard to get a very good valuation from the bank. All right, now secondly is that we are also looking for developer pricing strategy that this developer will up the price. Okay, when the developer up the price as spoken the last time, we will know that the price will definitely go up, hence that's how you make your profit. Okay, and I will also always like to look at the right price, the right location, and I will also look at the master plan for the next 5 years. These are all the key things for me to look at. Okay, now one thing I would like to consider is this. If you want to sell within 5 years down the road or 7 years down the road, it is important for me is that I would like to recommend you still a 3-bedroom. A 3-bedroom is still preferred because there is a stronger demand as compared to a 1 and 2 bedroom. Okay. However, certain location of course does not play into the picture. When we talk about the few recommendations I'm going to give to you, I will explain this more in details. Okay. And 1 and 2 bedrooms have a better rental return. Okay, so it's a chicken egg thing. We can't have the best of both worlds. And what I will always recommend is that if you are looking at a very short term of like 5 years, I'll still prefer you to have a 3-bedroom. Okay, now before I start, what was the current market direction for the last quarter and this quarter? Okay, you may heard, let me move the picture away a bit, and you may heard that in this business times, if I were to give you the PowerPoint, you will be able to click the link from the business times that Q3 private home prices has increased, new home sales has doubled, and rental are down. Okay, which means right, people who are been selling properties, like for example this year we are actually expect a recession, we expect market to go down. alright, or volume to be very low. However, this is different. In quarter 3, actually price actually went up, the volume has actually went up, okay. However, please do take note, this is Singapore in general. This does not talk about the different segments, okay. So 2 things I would like to put into a picture. Number 1, for this month, in the month of October, okay, this is the start of quarter 4. Now October is a bit scary because through my experience and through my colleagues' experience where I interviewed them, what we realized was that the number of volume transaction is actually went down. Okay, so less people are actually buying in quarter 4. You may be able to see this news in the next 2 to 3 months time, or maybe quarter 1 of next year. All right, but the only way you can know is from what from we agents that we are dealing with right now. Okay, now what we guess is maybe because October November period is maybe the exam period, therefore there is less transaction volume, less people want to look at houses, family want to concentrate on their child education or exams. Okay, we do not know the idea, but what is very beautiful for the month of October is that because the transaction volume went down, some developments start to give discount. Okay, and these are the developments that are more in the core central region. Okay, and I'll explain a bit more in details. Now, one example that is not in the core central region or in the outskirts, like in Hougang, is actually Florence. They start to have a price promo, okay, where the high floor units, they start to have a 1-tier pricing, which means instead of, like, for example, like 14, 12, 13, 14, they have one standard pricing, okay, and this is a way of discount, okay, and you can see the discount is not much, a lot, maybe it's maybe only a 4,000 discount, okay. However, if you look at the core central region like Rivera or Leedon Green, these are the ones that they have a greater discount. Okay, why? Because I'll explain in the few later slides later. The main idea is that because even so, in quarter 3, they are not being able to sell their product. Why? Because of the psychological barrier by the buyers. So if these developments are not selling, the only way that the developer can do is to actually give a discount, okay. And well, once they give a discount during just last week only, the number of transaction volume has actually went up. So for example, Leedon Green and Rivera, over the weekend about 10 to 15 units has been sold. So we can start to see the price or rather we will start to see buyers coming back into the market. Now, what I would like to share with you is actually a psychological barrier for this. You can see the pricing over here actually starts from like around 3,000 per square foot. Over here, Rivera price is like 2,008 per square foot. So prices are a little bit too high. Buyers are not able to accept this type of pricing. They will just feel that it's too expensive. So what do they do? Next slide. So if we look at the psychological barrier, now this is something that we agents, when we talk to buyers at the time, when we deal with different market, then we start to understand how buyers think. Okay, so what we realized was that for the core central region, the psychological barrier is actually 2,600 per square foot. So anything that is less than 2,600 per square foot, right, we believe that buyers will buy into it. Okay, and above 2,006, like if you are putting at 2,007, 2,008, the price is too high. Buyers feel that this pricing is too expensive, which is very true, especially like just now I show you Leedon Green and Rivera. Okay, these projects are actually above the 2,007 to 3,000 per square foot benchmark, and the sales has not been good for the last few quarters. However, once we enter into quarter 4, that time in October, where the developers start to give discount, alright, you will see that the price dropped to 2,005, 2,006 per square foot, and it becomes very sweet and buyers start to enter the market. Okay, this discount has been helping the developer a lot. Okay, now for the RCR, rest of central region, the psychological barrier is actually 2,000 to 2,200 per square foot. Okay, and the OCR is 1,700 per square foot. So this is what we call the psychological barrier prices. Buyers do not want to enter something more than this. Anything less than this, they are willing to go in. So of course, definitely same thought is that in future when you want to sell at time, if you can sell at around this type of pricing, this is where I feel that it will be very easy to sell for the next 5 years. Because why? The psychological barrier for buyers will increase for the next 5 years. But if you are selling at 2006, to them is actually something that's undervalued. Okay, so that is where I am actually coming from when I'm going to recommend you the projects next time. Okay, or rather later. So when every time when I have to choose a project that time, I will ask myself, okay, if this project CCR region, can I sell at 2,600 per square foot or not? Is it logical? Can I sell at this pricing? Will buyers buy into it? Okay, or how much profit will I make if I were to buy at less than that and then I sell at 2,600 per square foot? Okay, so same thing go for RC and OCR. Now, I've actually considered a number of properties. These are now this I actually have like 20, 30 over properties for me to choose from. And after that, I start to shortlist down to all these, and I start to consider even more. Okay, so let me just zoom in first. This I just want to share with you. These are projects that actually I did seriously consider. Okay, and from this shortlist, I narrow down even further into two types of Group A and Group B. Now, Group A, Claremont Clementi, okay, Penrose, Treasure at Tampines, and Marina One. Okay, so now these four is what I call the Group A properties because I feel that these properties I am confident that I am able to rent out for you, number one, easily, and number two, I have very strong confidence that after 5 years, I'm able to sell for you for a good profit. Okay, and moreover, that these are the one that I also look at the master plan and the location that gives me very high confidence. So, for example, if you ask me that if I have money to invest in, where will I invest? I'll definitely invest in one of these four. Okay, Claremont is actually I would advise a 2 to 3 bedroom where a budget of 900k to 1.5 million is what I call a sweet spot. Penrose Aljunied, I would only advise a 3 bedroom only where a 1.3 to 1.5 million budget. Okay, Treasure and Tampines is a 3 bedroom at 1.3 million. If you are going for, if you decide to go for a 3 bedroom and then you want to have a very low entry price, I feel that this is the best for you. Marina One is something that I like to hold off to for a while because I do know that it is above your budget. Okay, and someone is a 1 bedroom. However, when I done my research, I feel that Marina One is what I will call an honorable mention. It's a hidden gem. Whether you want to stretch or not, well, you can actually listen to it later. Now, for Group B, this is what I will call not so favorable, not as good as Group A. It's a bigger expansion, or you can use as a backup. When I have some clients where emotion come more into the picture, they like a certain location, they believe a certain location will grow. So this is where I will call the Group B projects. For example, 4th Avenue is in Bukit Timah. It's actually next to the 6th Avenue MRT station. For 1 bedroom, you can get it at less than 1.1 million. Very easy to rent, but my concern is that I have always have less confidence that I'm able to liquidate for you within 5 years. Okay, so the holding period may be longer. Avenue South Residence is in Silat Avenue. I would recommend a 2 bedroom at maybe 1.2 million. Park Clementi at Clementi, quite near to MRT station, very near a good school. I will only recommend a 2 bedroom where it is a 1.2 million. Puma Residence, Newton, for freehold lovers. Okay, a 1 bedroom that is 1.2 million plus, and this is something that if you like. For people who like freehold, I'll actually definitely recommend Puma Residence because a freehold price is the same as a 99 leasehold pricing. And lastly, we have a Cambridge Hill Residence, a 2 bedroom is at 1.35. That is near the Sufton waterfront. Okay, so again, what is the difference? Group A, I have more confidence in selling for you. So my next few slides, when I were to recommend you a project at the time, I will only be talking about these 4 properties and why I would like to recommend them to you. Now, I also look at the supply and demand for the next 5 years. You see, you are going to sell within the next 5 years, you need to know who are your competitors. And people, when they buy their time, they will always shop around in the vicinity. Now, I can show you Claremont, Key Residences, Park Clementi, Normanton Park, Cambridge Hill Residence and Avenue South are all located in the west side. So these are all the projects that will be up and coming for the next 3 years. Alright. Marina One in the CBD area, there's only one, hence you have no competition at all. If we look at the east side, you can see that the east side are actually very separated away. Now, in over here we have somewhere that is called next to the Tanah Merah MRT station. We do not know the name of the project yet because it was just recently balloted. Okay, the developer won the land price by MCC Land. Okay, and they got it at around 900 plus per square foot because basically MCC Land has actually run out of their inventory already. They need to replenish their stock, so they actually bid pretty high for it. In total, there are 15 number of bidders. If you are keen, I can send you this newspaper article. And from 900 plus 920 per square foot per plot ratio, we estimate that the developer will be selling at around 1,700 to 1,800 per square foot. Now look at this. I mean, if you look at the supply in the West, I have a concern is that there's going to be a lot of launches and there's going to be a lot of competition in the near future. But if we look at the CBD, there is no competition within the next 5 years. And if yours development is the newest within the next 5 years and there's nothing new, I feel that these are what we call a rare gem that which is going to be easy to sell in future because your project will be the newest over there. Penrose is interesting because the pricing is at 1,500 to 1,600 per square foot. If you can get 1,600 per square foot and in future they says that Tanah Merah is selling at 1,700, 1,800 per square foot, it is definitely going to look like a steal. Okay, Treasure is where I bought. I bought it for around 1,400 per square foot near the Tampines Central region. And at 1,400 per square foot, yes, you may say that the price is, I would say, reasonable. But however, if I bought at 1,300, 1,400 and next time I'm able to sell at 1,500, 1,600, remember the psychological barrier, I still believe that I'm still able to make a profit. Okay. Moreover, there is no competition. That is the main gist of this slide. Okay, so let me zoom in down what I consider the 4 Group A properties that I feel has the most value. Okay, and for these 4, firstly in the core central region is Marina One. In the rest of central region is either Claremont or Penrose, and the OCR region is what I call is at Treasure at Tampines. Alright, so these are my hardcore 4 properties that I really feel that these are the one that I am able to sell easily for you in future. Okay, I just want to make my job easy for myself also. I just want to make sure that I'm able to sell easily. Okay, so firstly, Claremont. Now, please take note that Claremont is not launched yet. Claremont will launch at the end of the year. Okay, so therefore, what is the unique selling point by Claremont? Number 1 is by UOL. UOL is interesting because they are the top 3 developers of Singapore. They give very good quality materials, and every time we know that they are able to sell your projects 100% before TOP. That's number 1. Number 2, they will also progressively increase the pricing, okay, and people still want to buy your project. Number 3, beside it, they have this project that also developed by them called Clement Canopy. Okay, and Clement Canopy has a proven track record and has also been selling well. Therefore, it's something that I would like to recommend. Okay, it also has very good upside potential, which I'll talk about it later when we talk about the location. It is near numerous education hub. Okay, especially it is near the NUS there. Clementi, you know, has a lot of education institute there, like Ngee Poly is near NUS again, and it's SMU. Okay, now UOL has also bought this land for pretty cheap. Which means a low land cost means you have a very low entry price at 1,600 per square foot. Okay, and what I like about Clementi is because it has a very high HDB estate. Now, if we talk about outskirts of Singapore, Clementi is the only estate that your HDB reach 1 million. Okay, we don't talk about Queenstown area because Queenstown is near to the city, but we talk about outskirts. Okay, and the BTOs people who bought into Clementi, they like Clementi, and therefore they will be able to have the funds to continue staying in Clementi and to buy a project over from you. Okay, now Clement Canopy is beside Claremont. What we look at the pricing is that the early bird over here at that time they bought at 1,300 per square foot. Okay, and now it is launching at around 1,500 to 1,600 per square foot. Take note, just now I was saying that Claremont is expected to launch at around 1,600 per square foot, which means you are actually entering around the resale price of Clement Canopy at 1,600. Now, just imagine this. If you enter at 1,600, my question is this. Are you able to sell at 1,800 per square foot? Does it make sense in 5 years down the road? Because that is your exit strategy. That is your exit plan, that you want to exit at 1,800. And to me, it makes a lot of logical sense that in future, after 5 years, I believe that you should be able to sell at 1,800 per square foot. Okay, so if you look at the pricing, you can see that this is again not Clement. This is again Clement Canopy, and I would just like to prove to you about the pricing. You can see that people who bought into Clement Canopy last time, they actually make a profit, you know, from capital appreciation of 77,000 to 300 over 1,000. For example, this is a 2-bedroom, okay, that is being transacted. This person who bought it at let me see. The contract date, they bought it at 950,000. They actually sold at 1 million plus. Okay, and for, let me see what other thing else. This is a 4-bedroom. Okay, maybe we look at 3-bedroom. 3-bedroom. This person bought it in 1.7 at 1.4 million. They sold it at 1,400 per square foot at 1.6 million. They have a 200 over 1,000 profit. Okay, and another unit that is a 2-bedroom facing AYE. Okay, facing AYE, they bought it at close to 1,500 per square foot, and they sold at 1,600 per square foot, making over 100,000 profit. Okay. Now, how about the location about Clement Canopy? Just want to share with you. Clement is located next to the AYE and is 700 meters away from the MRT station. Okay, 700, close to 770 meters away from MRT station. Take note, the last lesson that I actually went through with you, I was actually always sharing is that distance to MRT is important. Do not buy somewhere too near to MRT station. If not, the price, you have to pay a premium. And do not buy away 1 kilometer away from MRT station. If not, it will be very hard to sell. So at 700 meters away from MRT station, I feel that it is a good distance away from MRT station. Number 2, take note, it is next to Nanhua High School and NUS High School. Okay, actually when I was actually intending to go on Zoom with you, and then such that I can show you the actual map of it. But more important is the URA master plan. Okay, you will notice that the 4 projects that I recommend to you is that there is always empty plots next to this development. This is my key secret. Okay, that there is an empty plot nearby this development, such that when the developer, when the future development build that time, okay, this will cause Clement price to go up, like what you saw an example of Clement Canopy. Okay, so Clement next to it, you can see that there is an empty plot of land that in future a developer will come in, and this will cause the price of Clement to increase. Okay, so this is a very key secret that I would like to share with you, that you will see that these 4 projects, there is a pattern that will show that there is empty plots of land next to every development that I recommend to you. Alright, so let's look at this master plan. Just now, as I was saying, Clement is actually located over here, and this is the MRT station. So MRT station to here is 700 meters. This is Clement Canopy, and between Clement Canopy and Clement, there is a empty plot of land over here, and this will cause the price of Clement to go up. Number 2, look at the number of education institute around it. During the last session we had, I was actually telling you is that the number 1 reason why people move house is because of schools. With so many education institute, the chances of schools or of people buying into it will be much higher. Okay. Number 2, not only that, so just now I was talking about the empty plot of land beside it, distance to MRT, the number of schools around it, and lastly is by the developer, which is by UOL, which will actually increase the price. So Clement is something that I strongly recommend to a lot of my clients. The only drawback is that since this project is not launched, you may have to go for balloting, and this is where I will tell my clients that I will help them choose the unit, okay, which is where you can now go for, you can either choose a 2-bedroom or a 3-bedroom. Again, 3-bedroom is still preferred. Now let's look at the next project that I'd like to talk about Treasure. Again, this is my all-time favorite. Maybe it's because I have an emotional attachment to it because I stay in the East. Okay, and I found this to be very, very good. Okay, Number one, this project has a very low price. Okay, this project is one of the lowest in Singapore, yet it is within 1 kilometer from MRT station. If you ask me, it is about the same distance as Clermont, about 800 meters away. Okay, and it has a very strong growth location as what I show you on my of the last time the slides I show you, and you have a very safe entry price, which means if you enter at 1,400 per square foot, think about it. When next time in future, when Tanah Merah is launching at 1,600, 1,700 per square, sorry, 1,700, 1,800 per square foot, will I be able to sell at 1,600 per square foot or not? Okay, and the answer is yes. Okay, not only am I able to earn the 200 per square foot, my entry price is lower, which means the amount of cash that I put out is lesser, which means it will give me a higher return of equity. Okay, so this is something that for people who do not have so much budget, do not want to spend so much, but want to play pretty safe. So I would consider this one of the safest project, yet I am still very confident that I'm able to sell this project. Okay, that's why I just bought into it. Okay, so the price, what is the price? I will always question myself that I actually choose a unit for you. Okay, the unit, if I am a buyer, I'll actually buy this unit at 0515 at 1.3 million, which is a 3-bedroom. Okay, I mean, come on, all the projects that you see, where can you find buy a 3-bedroom at 1.3 million? Okay, that is 1,400 per square foot. My question I always ask myself is this: if I am an investor, I have to buy in at 1,400 per square foot. Will I be able to sell at 1.65? 1,650 per square foot. Okay, and I never write it down over here, but if I were to press the calculator at 1,650 times 915, it will be 1.5 million. Okay, so will a buyer buy into it at 1,700 per square foot mature estate at 1.5 million? The answer is very highly yes. Okay, because this has not passed the psychological barrier for the buyers. What is the floor plan look like? Okay, you may take some time to pause the video to look at the floor plan. Basically, entrance, there is a kitchen. We have a very good sized dining area, a living room, a balcony, and 3-bedroom. Nothing to shout about, just that the unique selling point for this unit is that the master bedroom is very huge. You can put a king size bed with 2 bedside table. Now, if you were to compare with all the condos in Singapore, okay, excluding core central region, I would say that this project is the biggest bedroom in Singapore. So what type of resale buyers will be attracted to this type? This is especially very good for HDB owners, okay, or HDB upgraders. HDB upgraders always say this: when they buy a condo at a time, they look at the condo, they say that it is smaller than my HDB. Therefore, I don't feel it's like an upgrade. However, at 915, this is a 4-room HDB size, and buyers, when they enter into a show flat at a time, they will feel that, oh yes, the size is equal, the same as my HDB. I don't feel I'm paying a premium. I'm able to enter into a right price, and yet this still feels like my HDB size that where I'm currently staying. Okay, so this is very easy to sell because of the size and the unique selling point of the size and the quantum that the resale buyers can enter in future. Okay, how about location wise? Now, pricing is important. You are entering at 1,400 per square foot, but then it's a very unique point because Treasure is actually located over here. It is within 800 minutes walk to Simei MRT station. It has 2 buses, 1 bus to get to Tampines and 1 bus to get to airport. And if we were to compare with all the projects in Tampines, the interesting thing is that projects in Tampines all are located around Avenue 10 area, all very far away from MRT station. And if you look at it, the prices, imagine you enter at 1,004, okay? It is roughly the same or slightly higher than resale projects in Tampines, and yet it's nearer to MRT. Therefore, I feel that if we have a buyer, you must understand that Tampines is a very huge mature estate. People stay in Tampines will not like to move about. Let's say we have this group of upgraders that they want to buy a condo. They will definitely compare with all the projects in Tampines, and they will say that, okay, if I were to pay slightly higher, okay, slightly higher, and I want to enter into it. And they will definitely go for Treasure because number one, it is nearer the MRT station. Number two, it is newer. Okay, so these are the things that you have to think about when we are talking about the projects. Now, lastly, can you see this is a school? Okay, this estate is a school. Now, this school, if you look at the URA master plan, has already been sorry, this school is not been torn down, but it's used as a site. It's just used as a holding site, which means it's very highly likely in future this area, this school will be removed and a new condo will be built over here. Now, again, just now what I said was that if there's empty plot of land, the condo over here, if there's a new condo over here, it will definitely bring the price of Treasure up. Okay. Next, I went through my now this is my last one. Now, Marina One is something I'm not sure whether I want to go through with you or not. It's good to hear. If you are not interested, well, just stop the video and then that's it. We can actually end over here. But you know, when I'm doing more research that time, I found more and more good selling points for Marina One. I feel that something is very, very undervalued. And if you can stretch a little bit, I feel that this is actually the best bang for your buck. Alright? So let me share with you about Marina One. Okay, Marina One, the unique selling point is it is the hub of Singapore. Okay, the story is that the CBD area is at Raffles Place. Raffles Place is too concentrated. What the government wants to do is that they want to bring the whole commercial district down to Marina area. So Marina area, you will see that there is like your Asia Financial Center, you know, your Marina finance building over there, and these are the one where all the banks is located, which makes it more vibrant. Okay. Number two, the price is below valuation. I'll share with you why is it below valuation. Number three, there's upside, a lot of upside potential. There's many empty plots of land in future, and there's also a very strong renter. Now, how do I define strong renter? I can share with you that when I sold a 2-bedroom to my client, and I sold it last year, he got the keys during the COVID period. Now, after COVID, within 1 week, I managed to rent out the place for him. So there's a very strong renter where, because people want to find a place to stay near your workplace. Okay, what I like best is that there's no supply. Now, besides Marina One, Marina Bay Residences and the sale, there is no supply. Basically over there, there is all the commercial area. And if you look about the next 5 years, okay, in the master plan, the government has no, URA has no intention to build any more residential, which means Marina One is the newest residential in that entire area. Okay. Now, what I also like is that the bedroom are bigger size. Okay, bigger size means if you buy into a 1-bedroom, it is actually the size of a 2-bedroom in Singapore. All right, which means in future, let's assume that there's going 10 years down the road, maybe there's going to be a new condo near Marina One, and this new condo definitely will the price will be higher. You know, and the price are higher, the size will also be smaller. Okay, where maybe the 1-bedroom over here is 700 square feet, the 1-bedroom in future will be 400 square feet, and then yet the price is somewhat higher. Okay, which means there will be a higher future demand. Okay, and best of all is that because Marina One has already been TOP that time, still sold by developer, you can get immediate rent straight away. So you don't need to wait for the building to construct, you know, you can get rent straight away immediately. Okay, so now talking about pricing first. Again, we talk about my plus system, we talk about pricing. Now, I only look at the 1-bedroom because I feel that this is somewhere that you can stretch a little bit. Okay, now 27, 23 is 1.778, 700 square feet. You can see that 700 square feet is the size of a 1-bedroom. If we look at Singapore properties, 700 square feet is the size of 2-bedroom with 2 bathroom. Okay, and what I like best is we talk about the pricing. It is below 2,500 per square foot, which is the below the entry barrier for people. Okay, now when we look at this that time, if another unit that I can actually recommend to you is 2923, which is at 1.8 million, 743 at 2445 per square foot. Of course, this unit is slightly bigger. It has a lower PSF. But just recently, when I was doing my research at time, I found something. Developer for stack 30, developer has sold the entire stack and left only the show flat unit. The developer just want to clear off this show flat unit. You can see this 2730, this show flat unit is 1.76, it's lower than these two, the size is bigger, the PSF is at 2300, below 2004 per square foot, and it is the best of all, is fully fitted. What do I mean by fully fitted? Because it is a show flat unit, developer has want to sell together with curtains, everything, the whole unit is ID treated, and moreover it will also include all the furniture. So I feel that this is a very hidden secret that a lot of people do not know. I only recently found out from the developer. So I found this, that your price is super undervalued and it is somehow fully fitted. You don't need to do any renovation and straight away you can rent it out. It is very, very beautiful. Okay. Now if we were to look at 2 years ago, okay, how much did the buyers buy? For those low floor, you can see that the people buy for over 2,600 per square foot, and over here you're only going for 2,300 per square foot. So for stack 30, I really feel that this is a hidden gem. You should honestly be going for it because it's something that is not only undervalued, and it's also going to be very profitable. How profitable? Let me prove it to you. Let's look at the rental first, because you are going to ask me how much can I rent it for. Okay, for 700 square foot, you can actually rent it for around 4,000 plus. Okay, higher floor of course can rent it for higher pricing. Maybe I would definitely say that 4,500 is a very safe entry benchmark. Definitely this type of pricing for 4,002 are those that are located at the low floor unit. Okay, comparable pricing. Now let's go back to our slides and we look at 2370 is the PSF, is the magic number. So let's look at 2370. Okay, you buy 2370 at a new project. Alright, let's look at Marina Bay area, Marina 1 residences. How much do people buy for last time? Now the price you can see that is increases, okay, in 14, 15, 16, because these are the period where the developers start to build, and you can see that now prices is around 2,500, 2,400 per square foot. So developer pricing strategy, the prices do go up, climb up in Marina Bay area. Okay, so right now you are entering at 2,300 for that particular fully fitted ID unit with fully furnished and full furniture. Okay, which is, I feel that it is a steal. Let's look at the pricing in location. Now, this is the expected price that people are going to go for. Okay, so we can see that the prices will actually go out. The expected prices for 1.8 to 2002 is actually 2008 to 4,500. Of course, this is the freehold prices. So as I just now said about the psychological barrier, 2008 is what people feels that below 2008 people are okay to enter. Maybe above 2008 people feel it's actually too high. Okay, so this is the slide related to the psychological barrier. Okay, so now in future, let's say 5 years down the road, these are the prices that we believe that people are more willing to be able to accept into it. So if you buy at 2,300 per square foot, you are going to exceed at 2,800 per square foot. This is what I expect for you. Okay, let's look at others highest PSF achieved in Marina Bay area. Okay, so Marina 1, the highest PSF achieved was 2,500 per square foot. It was sold, and Marina Bay highest was 4,000. Let's take a look again. This line is the 2,400 per square foot. You are buying around this line, okay, for that one special 1 bedroom. Now, can you see that in the Marina Bay area, all this is the price trend of the Marina Bay area. And you can see that the price are literally going from 3,000 all the way during these prices. Okay, of course these are the highest price achieved, PSF achieved. Therefore, high floor will be able to command a higher PSF. Let's look at the sale. Okay, the sale last time is commanding at all above 3,000 per square foot, close to 3,000 per square foot. So what I'm trying to say is that if you enter at 2,003 per square foot, your safety net is very, very high. One day, Marina Bay area is going to go back into this type of pricing at 3,000 per square foot. So, let's not be greedy. You are entering at 2,003, we just expect you to exceed at 2,008 per square foot. Number one is very logical. Number two, the past trend has actually shown that this type of prices in Marina Bay area can fetch 3,000 over per square foot. Alright? How about Marina Bay residences? Marina Bay residences, you can see that they are all going for above 3,000 to 4,000 per square foot. Now, again, all these are in the past. But because of the recession, because of COVID, prices literally has dropped. Developers do not want to sell, they have to clear stock, and yet they do not want to sell so cheap. So therefore, if you can go at 2,003 per square foot, you are buying something even cheaper than a resale. Let me repeat again. You are buying something brand new, cheaper than a resale. Okay, let's look at Marina Bay residences now. Okay, right now, because Marina Bay residences fetches 3,000 last time. How about now? So right now, you can see that the price for Marina Bay residence, it has also dropped. The price was ranging around, transacted. We talk about higher floor, 27th floor. It also 2,300 per square foot. And the completion date is in 2010. Okay, 8 years later, Marina 1, you are buying a newer project, 8 years newer project, and you are buying it at the same price for resale. Okay, so this is something special that, the more I do my research, the more I found a value buy. How about compare with newer resale? Okay, now Woolwich Residence was the one bought by Dyson. Okay, they are actually selling for 3,400 per square foot at at Tanjong Pagar. South Beach Residences at near the Bugis area at 3,000 per square foot. 5 on Shenton near Marina 1 itself, that is older than Marina 1 and is going for 2,005 per square foot. Okay, Marina 1 residences on average is going for 2,500 per square foot. When we say average that time, means a 1 bedroom, we should be expecting 2,600 per square foot. If I were to show you, when we have time to discuss, I can show you the pricing. And I can show you all the pricing for the 1 bedroom are actually going for 2,600 per square foot. Okay, I can show it to you. But I found special stacks for you that are actually going for 2,300 per square foot. Okay, so therefore, number one, you are buying near at the city area itself, city center itself. Okay, surrounding it, there's no competition, and moreover, you are buying at the cheapest possible pricing. Okay, now we want to compare with other pricing also. Let's look at the discount that they are going right now. Just now I'll share with you about the Liden and Rivera. Okay, so how much are they selling? Last time you can see that they are selling at over here. Some they are selling from 2006 to 2008 per square foot. Entry price is at 2,400 per square foot at the low floor, 3 bedroom, all the way to 2,800 per square foot. Okay. Now, right now there's a discount given. How much are they selling for? They are selling for 2,300 to 5,500 per square foot. So these are the promos that Rivera is giving right now, and they are moving. Take note, they are not the core central region. Okay, they are not the core central region. Okay, therefore, come on. We use a little bit of common sense. If I want to give you somewhere that is the city center next to MRT station, as compared to Rivera, this is where the old Zouk was located, near Kim Seng Road, and they are fetching for the same price. Which will you choose? Let's look at Liden Green. Liden Green, you can see that the prices is at 2,008 all the way to 3,000 per square foot. Okay, so this is right now the star buy pricing that they are giving. Okay, so these are the pricing that they are going. So it's honestly they still have some difficulty in selling, but they are still giving some promotion. So now just think about it. Liden Green is located at Farrer Road, District 10, core central region. And District 10, they are selling at 2,008 per square foot. Compared to Marina 1 area that is selling at 2,003, in future, will you be able to sell at 2,800 per square foot or not? Does it make sense to sell at 2,800 per square foot? And that to me is your exit price. So let's look at other new launches for this year, last year, okay? And we look at District 3 again. District 3 is still not considered core central region. Now, the average for RCR region is 2,100 per square foot, okay? Rivera, we said that the average is 2,800 per square foot. This is the old price. Of course, the newer price average is around 2,006. Sterling is at Queenstown area. Sterling more or less has already been sold out already. That's why the average price was around 1,900. Just now we talked about the psychological barrier of below 2,000. People can enter into it. That's why Sterling was able to sell out. Okay, Avenue South was something that I would like to recommend to you if you are going for a 2 bedroom for a lower quantum. The average was 1,900 per square foot. Okay, yeah, and one per bank average is 2,400 per square foot. So put it this way, when now these two I do recommend to you, Avenue South and Cambridge here, just that is in my B project. Okay, not so the one that is not so attractive one, but I'm still confident in selling. Just that now we look at one per bank. One per bank is near Chinatown. The average is 2,400 per square foot. They are able to sell slowly, okay, but they are selling. And the developer is by Capital Land. They are not going to reduce their pricing, okay. Just think of it this way: Chinatown 2,400 per square foot, Marina One ready, entering at 2,300 per square foot, even cheaper. Which will you choose? Which will a consumer choose in future when they want to buy a investment product? Okay, city center or Chinatown. Now, other launches at ASEA, Uptown FM, no, I'm not going to talk about all this. I just want to show you that the average is around 1,800 per square foot. Okay, new launch prices. You can see that the new launch prices for RCR is around 2,100 per square foot. Okay, average. Now, why I want to show you this slide is because to give you an idea of how much they cost. And if you buy a core central region that is in the center of Singapore, that is 2,003, not so much of difference. Just put it this way: next time in future, the price for all this will definitely go up to 2,005. Okay, and if they want to go up to 2,005, I mean, it's something like what I want to encourage to you is that if the average price is 2,001, and if you just spend a little bit more, that you can reach to 2,300 per square foot. Okay, just pay a bit more, you will be able to get somewhere that is in the core central region in the center of Singapore. Much better than all of this. So I found that as a hidden gem for you. Okay. So what is the floor plan? 700 plus square feet. This is the size of 2 bedroom. Entrance coming here, you have a gourmet kitchen. Okay. This kitchen can be enclosed it up, but I will not encourage that. It has a very huge living dining area, and we have a master bedroom with a walk-in wardrobe. So this type of size is what expats will like. Now, why I would like to show this article is because the idea is that we have a celebrity buyer over here, and celebrity buyer is one in a way is like make this project popular. It will help bring buyers into it. Okay, so Romeo Tan, I hope you know our Singapore actor. Okay, these are the links that you can click on it and you can read more about it. So he has actually talked about his bachelor pad. So in future, next time when you want to sell that time, I would consider this type of people, single bachelor, as your main target market. Either they are bankers, or maybe people like yourself, or investors. These are the people who actually enter into it. And interesting is about this picture over here. Why? Because this is actually the empty unit that he bought into it. This is actually the show flat unit. Okay, so I do not have a picture for me to show you, but if we were to go down, you will be able to see how it looks like. It will be something like this, and it is very, very huge. Okay, 700 over square foot. Okay, now location. Let's talk about location. What I like about Marina One. Marina One is actually located over here. It is next to 3 MRT station and served by 4 MRT line. That is why I consider this the center of Singapore. Number 2, URA master plan. Surrounding it are all empty plots of land. Most likely, the government is going to develop what? Develop commercial, not residential. I can assure you for the next 5 years, there is no residential that is going to build within this zone. Which means when you sell that time, I guarantee you, your project is the newest residential unit in this location. Okay. Number 3, we talk about connectivity. The beautiful thing about Marina One is that even till now, the government is still building. They are going to build a walkway that will connect underground all the way to the MRT station, all the way to Marina Bay Financial Center, all the way to Asia Square Financial, and all the way to your breakfast place. Okay, so there's a way for you to walk underground without getting out all the way to breakfast place. Why? Why is this important? Just imagine your tenant is not just servicing around this location only. Your tenant also comes from the breakfast place area. And you know, when someone is working at breakfast place, they just get down, they will just walk through the MRT station all the way to Marina One area itself. Okay? And just do not be afraid, because this picture is not so good. Why? It is flanked by two parks. This is one park. Behind here, the MRT station, this huge area is also another park. Why I have to inform you is because, right, these two parks will prevent future development from building and blocking the view. Okay, so this area will next time in future all be developed. Alright. Now, if you are just curious to know where my client, a 2-bedroom who bought a 2+ study, he actually bought at the corner over here where he will be able to see the Marina Bay Sands. Okay. Okay, let's look at the URA master plan. Just now, as I was saying, this is Marina One itself. Okay, this is where the 1-bedroom, the condo is located. And you can see that from behind and in front here, all the green color are all the parks. Surrounding it, because of the plot ratio, okay, 15 and 20, all these most likely will be commercial area. Well, now these are what we call white sites. What is white site? White site means we do not exactly know what the government is going to do with all these. Like blue color is going to be commercial. Okay, so just to show you the URA master plan. Now again, so my slide is going to end soon. Okay, I just want to share with you my preferred choice. First of all, I found out something that's super undervalued, you know, and I'm very happy that you know, me doing this research, I found something very good. My first choice is still Marina One. I do understand that the price is maybe above your budget, but let's see whether we can stretch or not. Okay, it's easy to rent out. The price is super undervalued, and it is able to sell in future. That is what I can guarantee to you. I am very certain that I'm able to sell this unit easy to liquidate. Number 2, Treasure and Tampines, again, at a low entry price of 1.3. If I'm to sell at 1.5 million, I feel that it's a no-brainer. I feel that it's also very easy to find a buyer. Okay, my third choice is either Penrose or Claremont, where you can actually go for a 2 to 3 bedder. Alright, and this is actually my third choice because if you were to enter at if you were to enter at 1.5, 1.3 or maybe 1.4, enter at 1.4, you should be able to exit out at 1.6, 1.7. Okay, so important thing is that all these choices, these 4 choices I had for you, they have always an empty plot of land besides it. Okay, now we talk about budget. What budget suits you? Okay, maybe this slide will be important for you, and this will be my final slide. Budget. Now, let's say you are going for a 1.3 million budget. I just need to know that the down payment and the buyer stamp duty, these are the down payment and buyer stamp duty. In total, the total amount of cash and CPF you need to have is 360,000. The monthly mortgage will be around 3,400. Okay, for a 1.6 million, the total cash and CPF you need to have is 420,000. The monthly mortgage will be around 3,000, close to 4,000. Okay, and at 1.6, the total cash and CPF you need to have is close to 450,000, and your monthly mortgage is around 4,200. Now, why am I putting all this to you? To give you an idea that how much cash and CPF you are willing to invest in, because all this will be able to cover your mortgage. Basically your income will be able to cover the bank loan. So the limiting factor is actually how much cash and CPF you like to throw in. Okay, and at 1.8, why I put this is because of Marina One. Marina One, you need around 500,000. Okay, and your monthly mortgage will be around 4,700. So getting at a high floor, if I have to be able to rent out for you at 4,008, I am sure that right now, very beautiful is that you are able to rent out at 4,008, you are still able to cover the mortgage and still get a bit of money in return every month. 5 years down the road, I'm very certain I'm able to sell it for you. Okay, so this is this slide is basically for me to share with you your budgeting. And if you have any So basically, this is my end of my presentation. If you have any questions, just feel free to send me a text. And I hope to get on Zoom meeting with you. Alright? So thank you. So long and bye.